It's a pleasure to be speaking with Charlie Robertson, the Chief Economist of Renaissance Capital here in Nairobi. Charlie, thank you for making time for us today.
Thank you very much again for having me again.
No, it's a pleasure. Let me start, Charlie. If we look at the world today, it reminds me of like the 94, 98, when there was massive EM contagion. How do you see the world as you find it today? What's your perspective on it?
I think emerging markets are facing three challenges. One is the stronger dollar. It's never great. Second is rising US Treasury yields, which even in good bull markets for EM have led to 20% corrections in EM. We saw this in 04, 05, 06, 07. 100 basis points move in US Treasuries, 20% fall in EM. This year, same story. US Treasuries up from 2 to 3%, EM down 20%. So it looks like it could still just be a correction. But there's an anxiety about US inflation picking up, and this is all connected. So the second negative is to do with monetary policy in the US. The third negative is Trump's trade wars. And that's
so tell us about that.
Trump's trade wars are negative in two ways. Firstly, they feed back into that inflation risk in the States. And the worst thing for EM is US inflation hitting 3% or more. When that's happened in the past...
But that economy is blowing real hot, Charlie.
It is. And Trump has fed that with the fiscal stimulus at the worst possible point in the cycle.
That's right.
Least necessary point in the cycle. And wages are anyway picking up. We've just had the strongest ISM figure out a week or two ago, strongest in 14 years. So you've got a strong economy getting even stronger, and inflation risk then is picking up. Protectionism feeds that.
Yes.
The trade war story is something we've seen before. We saw it with Reagan in the 1980s.
With whom?
Japan was the rising Asian power of the time.
Yes.
I've got a graph which I'll send to you later, which shows the rising trade deficit with Japan throughout the 80s. Reagan's going in and putting taxes and tariffs and everything as limits, quota limits on Japanese goods. They can't export Japanese motorbikes of 700cc or more. So the Japanese start making motorbikes with 699cc. They get around it as much as they can, but he keeps on ratcheting up. Trump's playing the same thing.
Right.
Two things I think is going to happen. Firstly, this has clearly been a negative for EM because it's a negative for China. China's the most important story in EM.
So you see China as the most important component for EM?
It's heading up towards 40% of MSCI EM now. So when you buy emerging markets, you are buying China and a whole load of 23 other countries, which make up just over half of the index. So it matters a huge amount. My base case is that we're going to see Trump, he's already declared a truce with the EU in July, a trade deal with Mexico at the end of August. I think as we get closer and closer to the midterms, he's going to declare a victory over China. Tariffs will come off, EM will rally, there'll be China's okay now, and this could be quite a good time for emerging markets for a good few months.
Yes. Then tell us, because you had a very interesting, you thought we're going to revisit this trade war, that will be a temporary type of truce type rally, and we come back.
3 biographies of Trump.
Yes.
As soon as he took power.
I think he's an escalator. He's a...
And protectionist to his core.
Really?
You go back to a speech he gave in 1988 saying what Reagan was doing on Japan wasn't enough, that the Japanese were laughing behind their smiles, as he put it, and they were out to run this huge trade surplus for them, deficit for America, at America's expense. He's been protectionist like this forever. He's going to come back to it again. When the trade deficit gets bigger in 2020, when the victory he announces in October doesn't prove to be much of a victory at all, I think come 2020, or maybe even 2019, he starts the trade war again.
So you are a buyer of EM now on that basis?
Our base case is we are heading towards a good story for EM for 6 months at least. Euro dollar I can't forecast, but does the end of the trade war reduce the inflation risk in the States? Yes, it probably does. The fiscal boost we've had this year probably fades next year. That can help as well. So US rates, okay, 2 more times this year and then up 1 more time next year, and maybe that is it. But most important is the markets need a catalyst now to buy EM. EM is cheap. Currencies are below their long-term average in EM, ex-China, but the rest of EM, they're now below the long-term average. In Turkey's case, 40% cheap.
So let's now, can you take me around the world a little bit? You know, Argentina, Turkey, India rupee, record lows, South Africa. What's happening in that, you know, in that arc of economies of EM?
So to some extent, we are seeing a little rerun of the Fragile Five in 2013. There is a big change. In EM today, if you add up all the countries that have got a current account deficit worse than 3% of GDP, they account for less than 1% of emerging market GDP.
Is that right?
99% of emerging market GDP now has a current account deficit of 3% of GDP or less, or even surplus.
So going into this situation, what you're saying is they're significantly more well-disciplined than ever before?
Much more so.
Yes.
Much more so. The 2013 sell-off, the Fragile Five sell-off, has already had an impact and a benefit. However, those less than 1% of MSCI GDP includes, you know, Pakistan, tiny, but quite big deficits, Turkey, quite big deficits, and Argentina, which is joining EM next year, big deficits, 5, 6, 7% of GDP on the budget and the current account. And the markets have said, Fed funds are going up, US treasuries are going up, dollar's going stronger, we're going to just sell the vulnerable stuff until the authorities do something to change what's causing this underlying weakness.
So does policy making have a big role to play at this moment in EM?
Depending on the country, yes. Argentina, what's caused Argentina's current account deficit? The budget deficit's probably the major cause. Banks aren't lending. Banks haven't lent in Argentina for 15 years. But the government's been borrowing too much. 5, 6, 7% of GDP, depending whether you look at the primary or the full deficit. And the markets have said, you've got to do something about that. And Argentina's taken quite a long time to react. In fact, the biggest budget promises have only come in the last 2 or 3 days.
Is that right?
The currency's only got cheap on our model of overvaluation, undervaluation, only got cheap at the end of August. So it's been an overvalued currency with big twin deficits. The government had to act. Turkey's a bit different.
Yes.
Turkey, twin deficits, but the big one is the current account deficit, not the budget. The big problem there was the banking sector was just lending out too much money, and had been doing so for many, many years.
So what was private sector credit growth in somewhere like Turkey like?
Private sector debt to GDP was about 15% of GDP in 2002. That's half of Kenya today.
Yes.
So this was an emerging market with much less private sector debt than Kenya today in 2002. And now it's about 70% of GDP. 70% is not that massive. There's countries like China have got double that. America's got more than that. But to see that scale of increase, usually there's excess. It could be real estate, which has certainly boomed. It could be just people taking debts on that they shouldn't take. We saw it in the US housing bubble, same story. So you had it started off with an overvalued currency a while ago, started to get cheaper this year, but what you really needed to see was the banks stop borrowing so much from abroad, stop lending so much locally, and credit growth slow down, private consumption slow down. And Turkey's going into recession, forced on really by the markets, saying your currency was too strong, it needs to get much, much cheaper. So the overvaluation, the problems in Turkey have probably stopped now. This is a country going into recession. Argentina is probably going into recession. And the markets are saying who's next.
Yeah.
And you look for anywhere that's got a twin deficit and an overvalued currency. So actually in EM, I'd say Pakistan's probably highest on the list right now.
Next, and also people very worried that they've got to go to the IMF, right? This big CPEC
They've taken on projects with China which don't look very economic.
Yes.
But China's funded their investment story. Pakistan's acute problem is a lack of investment. China said, we'll do the investment for you. Here's the projects, and this is the return we need to make on them. The IMF will look at some of those projects and say they're not really worth it.
No, that's right.
But you've also got the problem of Imran Khan, who's just won the election, first time ever, and he's promised health, he's promised education, he's promised good things to all people, but he probably has to cut spending.
Yeah.
and maybe devalue the currency some more. That's a tough thing for any newly elected politician.
No, especially somebody who's
trying to support the poor, the man on the street.
Yeah. No, I remember watching him play cricket. I hope he leads Pakistan as well as he bowled.
That'd be very useful.
Charlie, if we come down to Africa, given these sort of cross currents you're talking about, this weakness we've seen in EM, and now you're describing a possibility of a bounce around a truce with the Chinese. What are you seeing on the continent? You're very bullish about Egypt. You like the fact they devalued a couple of years ago, kind of got ahead of the curve, if I remember correctly.
Yeah.
South Africa's front and center in people's minds. We've had some very big exponential moves to the downside on the rand. We're lower on the rand than we were at the time that ministers were being guillotined by Zuma. So what are you seeing for the continent at the moment? Are we importing this EM weakness across the continent?
South Africa's problem is that it's the most overtraded EM currency in the world. 17% of GDP every day is traded in South African rand. $51 billion. An economy that a couple of years ago was less than $300 billion value add in a year, $51 billion every day is traded. Amazing. So if you ever want to see weakness in EM, you want to short EM, you want to hedge your position in EM, you sell the rand. So that certainly means that they've been affected. But they also have small current account deficit and a budget deficit and no growth.
Yes.
And you put that together, and a minimum wage is $250 a month.
You were saying, I was quite surprised at that figure, and you said Egypt was 67.
Yeah, Egypt 67, South Africa's 250, China's, depending on the province, between 200 in the poorest province, 300 in the most expensive province. Vietnam's 150.
Yes.
Vietnam has got everything right.
Yes.
Education, electricity, infrastructure, it's looking...
Those were the three that you were saying make or break. The education of the people I read, the amount of electricity per person.
Yes, and investment to GDP. And Vietnam's ticking all the boxes, and South Africa needs to be more competitive if it wants to employ more people. And the markets maybe are giving it that competitiveness by weakening the rand. What you'd want to see from Ramaphosa, perhaps, is a change in labour market legislation to enable minimum wage to go down.
Yes.
In dollar terms.
Yes.
So that people
will come. That might not be tenable politically.
Not before the elections.
No.
Before the elections, he has three priorities. First, talk about land reform.
Yes.
To get rid of the left-wing threat from the EFF.
Yes. Yes. Is that being effective? Is that working for him, do you think?
We don't know yet whether the EFF may say, you know what, we may as well come back and join the ANC again. But he's keeping that option open. But all the markets are hearing is, this is Zimbabwe all over again.
Yes.
Negative for the rand.
Trump weighed in as well.
And Trump is all in too. The second thing he's focusing on is internal ANC opposition.
Yes.
So he got a very divided ANC top leadership. Just this last 2 or 3 days, he's been out against the ANC Secretary General, saying he's trying to organise something against him with Zuma. That's his second priority. Again, this is not what the markets want to see is how are you going to reform your economy and get growth to 3 or 4% and get your wages competitive with Vietnam. And instead he's talking about ANC internal battles, not what the market wants to see. And the third thing he is doing is trying to root out corruption in the state-owned enterprises.
Yes.
This is essential in the long run.
Yes.
This is rand positive in the long run. But today, can you buy that? Maybe for a bond investor in Eskom you can. Yeah. But in equity investors they can't. This is okay, good to have in the long run, but today, how does this help me? So the markets are saying no good news on the land reform. In fact, that sounds scary. I don't care about the ANC battles. Yeah, the SOE, state reform, good, but what does this deliver me today? Sell the rand, because EM's under pressure. So that's South Africa's problem. North Africa, I'm bullish on actually.
On Egypt?
Not just Egypt, Tunisia, Morocco.
You were showing me Morocco was top of your league.
These countries have all sorted out their educational deficits in the last 10 to 15 years.
Yes.
None of them had an adult literacy rate of 70% 15 years ago. Well, Tunisia did, but they had other issues we'll get to. And they were small. They didn't have enough weight to get over the industrialization threshold. They didn't have enough electricity in some cases. They didn't have enough investment in some cases. Today, in Morocco's case, all three striking the ball out of the court.
Yes.
That's probably a bad thing.
Yeah.
Out of the park, thank you. So Morocco's totally there.
Yes.
Tunisia, after the elections in 19, I think will be there. Egypt needs to get investment up and they'll be there. So North Africa's got the literacy, it's got the electricity.
So you're saying that's an interesting development then, what you're telling me, because if you look back at 2011, the Jasmine Revolution, what you're saying is that notwithstanding all that volatility, they've actually made considerable strides.
They were already in getting there. They were very close to it, and it got disrupted. Why haven't factories been set up in Egypt in the last 5-10 years? Arab Spring, change of regime in 2013, currency volatility, there's been a lot of issues. But I think there's two more factors at play for North Africa which are very important. First, the trade war with China.
Yes.
China's probably going to have to do what Japan did in the 1980s when Reagan did his trade war with Japan. You move your factories offshore. Thailand, Indonesia, elsewhere in Asia. I think the Chinese will be saying, where can we move our factories?
That's an interesting point. So you're saying that this Justin Lin argument that thousands of millions of Chinese jobs are coming to Africa might go to North Africa?
That's the most obvious place for them to go,
Yeah.
because North Africa is ready to industrialize now. The second reason is that 5 to 10 years ago, they wouldn't have gone to North Africa because Central Europe had even better literacy, even better electricity, and they were in the EU. Perfect. They ticked all the boxes. The trouble is Central Europe has now run out of labour.
Yeah.
Workforces are literally shrinking. The Polish, ethnically 99% white Catholic, are now saying, how can we get Indians to come to Poland
Is that right?
to
When
fill
I
our
lived
labour
in
market?
London, it was full of Poles.
Yes.
So
Poles have,
what you're saying is the population curve is going down.
it's going to be negative, and it's going to be negative for the next 20 years.
Yeah.
So the population is shrinking by about 1% every year now.
Wow.
If you've got a job, you go to your boss and say, give me a pay rise of 10%.
Yeah.
In Romania, they're getting 30% pay increases.
What?
Inflation's at 5%.
Wow.
It's amazing. So this is happening because labour's run out.
Yes.
20 years ago, you just built your factory and you built your Toyota, your Peugeot, your Volkswagen, Japanese, Korean factories. You built them in Poland and Hungary and Czech and Slovakia. But now, that's not possible anymore. So where are they going to go? I think they're going to go to Egypt, Morocco, Tunisia.
Interesting.
And any other countries in Africa that are meeting the literacy, electricity and investment thresholds, which might include Ghana,
Yes. So you're now coming down.
into Sub-Sahara,
Yes.
Ghana, a lot of southern Africa actually.
Yeah.
The numbers for Angola and Mozambique, I need to get into more.
Literacy, probably.
I need to check into more detail, but Zimbabwe could be good.
Yes.
Zambia is good. Right now the markets are not treating it that way.
My God, I saw the British just pull some funding on the basis of corruption.
They have got
Bond is probably the worst performing bond in the world.
the price to default.
Right,
16% yield on dollar bonds is worse than Mozambique
Yes.
a week
In
ago.
the default.
Yes.
Yeah.
Mozambique has defaulted, Zambia still has not. But our debt strategist, Greg Smith, will be here
Yes.
tomorrow night. He's just flying in from Lusaka.
Okay.
We're going to have the latest on that soon.
Yes.
But the fundamentals are there for Zambia to do something extraordinary. And what the extraordinary is to try and get per capita growth, per capita GDP growth, off the kind of 1 to 2% level, which most countries across Africa, including Kenya,
After population growth.
after population growth, that's what they've had. Over 30 years, about 1 to 2%. What you want is 4, 5, 6% per capita GDP growth. That's what Korea and Taiwan and Vietnam and all of the industrializing economies have done. China's, again, just exceptional. It's managed 7%. But only 3 countries in the world have done that. But quite a lot more have done 4 to 6%. So take Kenya. Kenya's growing now at 3% a year population.
Yeah.
Add 1 to 2, that's historically what it's done, and you end up with growth of around 4 or 5%. Things go well, a little bit higher, maybe a little worse if the harvest, the droughts come in, if the rains are not good. But that's what Kenya's at. What we want to see is countries like Kenya growing at 3 for the population plus 4 to 6 for this industrializing, or indeed it could be services, it could be banking.
It's got a big service component.
That can also be massive, but you do still need people who can read.
Yeah.
You're not going to have a mobile phone revolution of people who can't read what's on the mobile phone. Now, Kenya does have
That's
that.
a good one.
But you do need that, and you need electricity to charge
Yes.
that phone. So these things will matter. But if you get that 4 to 6%, then we're talking Kenyan growth of 7, 8, 9% every year.
Which they've been talking about. We have hardly ever reached those levels.
Because Kenya does now meet the education level it needs.
Yes.
Its electricity consumption is half. In 2015, it was half what it needs to be. Its electricity consumption.
But there's been a big effort on that front.
It's going up. It is going up. But so's the population. So you need to grow a lot. At the moment, the electricity is similar consumption level to Mauritius in 1971.
Whoa.
Mauritius came good.
Yeah, very
Mauritius
good.
has come very good. So I don't see that as a negative. I see that as a
But
positive.
it just means that we're quite far behind the curve still, even after what we've been hearing and seeing.
I think we need to see an awful lot more on the electricity front. And we also need to see investment up. It needs to be 25% of GDP.
What is it at the moment?
That's 17 according to the IMF. That's not enough. There's many countries that are not doing enough. Nigeria's at 13, Pakistan's at 14% of GDP, Ghana's about 14, Egypt, which I love, 15% of GDP, still not enough. Kenya 17 is beating all of them. Ethiopia 39% of GDP.
Wow. And was it, in Ethiopia's case, just quickly, can we just touch on that? I mean, you know, I found him to be really inspirational. I can't remember an African leader who's made me feel as good as Mandela used to make me feel.
He's doing a lot of things right.
But it's a big job he's got
But
there.
his challenge, less than half of the population is literate. The Kenyans are 20, 30 years ahead of Ethiopia on
That's an
literacy.
interesting point.
Secondly, on electricity, Kenya is twice as far ahead as Ethiopia.
Notwithstanding all these electricity projects they got going.
That's going to change the story.
Yes.
By 2022, 23, I think they have a chance of getting up to about this 300 threshold we think is very important. Kenya's at 160, you want it to be 300. Kenya needs to double. Ethiopia's at 80. So the result of all of this, no electricity in Ethiopia and very little literacy, is your manufacturing sector is 4% of GDP.
Yes.
It's the smallest. There's only 7 countries with less manufacturing in
Ethiopia.
the world than Ethiopia.
But they've been,
And
the
the
whole
Pacific
model
Islands.
is built on this new rolling out manufacturing facilities and these special economic zones and industrial parks. But you're saying it was just a drop in the ocean.
It's all in Addis.
Yes.
Population is 90 plus million. Biggest city is maybe 4 or 5 million. Second biggest city? Do you want to
I have
hazard
no
a
idea.
guess?
Go on.
It's about 300,000 people.
What?
So this is a subsistence agriculture economy with one big city. And that one big city is, you compare it to Lagos with 20 million people.
Yes.
It's not even the same story. So you've got a country which is massively investing but has run out of money to pay for that investment. Hence, there had to be a change.
Yes.
The question we've been asking about Ethiopia is the new leader more of a Gorbachev or a Yeltsin?
Yes. What is the difference in Gorbachev and Yeltsin?
Gorbachev was a guy who tried to change the system from within. He recognized there needed to be reform. He was a risk. He was a guy that older guy, Andropov, I think, had been pushing forward to be the new leader before Andropov himself died. But he struggled to do it. Yeltsin was more revolutionary. He unleashed the private sector. And I'd hope that the new Ethiopian leadership is a mix of the two. Not so destructive as Yeltsin ended up being in his early years.
Because Putin, I'm sure, although he was Yeltsin's protege, in a way was trying to go back to the status quo ante, wasn't he?
Yes, but he's allowed some private sector. So what Ethiopia probably needs is more private sector involvement, is selling stakes in the Ethiopian telecoms and the airlines as they're planning. But they would get a better price if they sold majority stakes, not minority stakes.
Yes.
They'd probably see a little faster reform if they open up the banking system as well.
Yeah.
And there's still an awful lot to be done just at the grassroots level, just things like literacy and education. They're making progress. It's good progress. Primary school numbers are good, but it's going to take a long time.
Let me come now to the place you're visiting. You've been having meetings today with fund managers. I believe you're meeting policymakers tomorrow. How do you read the situation here? We've had a number of events in the last few weeks. We had the IMF facility roll off. There's been a tremendous debate in the media here about whether we're getting value for money for the borrowings that we've taken. I know Henry today is talking about GDP being at a 7-year high. I'm struggling to see how that happens. How are you reading the situation here? What do you think we need to watch out for? You were comparing before we started some of our deficits to Argentina and Turkey. Maybe you start with that.
If you look around the world in frontier and try and find who looks the most vulnerable candidates to an EM-style crisis, such as Argentina or Turkey have had, and you have to say any country with budget deficits as big as Kenya's, current account deficits as big as Kenya's, and with a currency which most real effective exchange rate calculations by most banks say is overvalued, Kenya looks ripe for something to go wrong. It's not going to go wrong like Turkey. It shouldn't go wrong like Turkey, because in Turkey it's been bank lending, and there's very little bank lending right now in Kenya.
Well, actually only to the government.
Indeed, only to the government. The risk then is more likely to be, as with Argentina, is the budget deficit. The budget deficit's probably too big. Now, I'm very sympathetic to what the government's doing in Kenya. I think Kenya is trying to accelerate investment, because it needs to get that investment GDP from 17% to 25%. I think the government should be spending more on investment, ideally. But this is not the year to be doing it. This is the year when the markets are saying, we are fearful, we are looking for risk, we're looking for problems, we're looking for things that could go wrong, even if they haven't gone wrong. Zambia has been sold to 16% yield on the dollar debt. For what obvious reason? They've got smaller deficits than Kenya.
They have. Debt to GDP is much lower.
But the markets are worried. So it wouldn't take much to spook the markets. A government that can't get through tax increases, a government that's reluctant to cut spending as much as the markets might think was sensible. It's quite easy to see a negative scenario unfolding here, and people are anyway worried about excessive indebtedness by a number of countries, actually. But across Africa, this is a worry that's growing.
It's an incredible sea change, isn't it, when you think about it, the way you're describing it, from 2 years ago when, any African government would put their hand up, how much do you want? 10 times oversubscribed, here you go. I mean, it seems a different world.
It is a different world, and people would say, look where the Fed funds are now versus 2 years ago. Look where US borrowing costs are now compared to 2 years ago. That's why it's a different world. And Trump playing into this with trade wars, and that's adding to fears as well. It is a different world. My argument 2 years ago was, well, if the markets are going to lend African governments money at 6 or 7%, take it.
Yes.
You can do so much more with this money. You can make a difference to your countries in such a big way. And it was a great opportunity.
Who would you say took that opportunity in the way you wanted them to take it?
I think Rwanda did.
Yes.
I would actually argue Kenya has done as well. There is now a railway line heading down to Mombasa. Okay, the Chinese played a large part and role in financing that. There has been road improvements in the last 5 years here in Kenya. I think Kenya's doing a decent job. I think Ethiopia's been doing a decent job. Rwanda. I think a lot of governments have done it fairly well. Governments that were not doing it well, Ghana back in 2011, 12, 13, actually the markets punished them even in the good times. Ghana got punished. So I think governments have generally done quite a good job. The difficulty now is changing tack. It's saying, you know what, that was easy to finance, the money was cheap, it was available, it was easy, I could invest loads. Now I can't, so we're going to have to cut back. And it's not going to be quite as much fun for the next year or two.
That's pretty tough.
It's tough for any government at any time, but that's the wise course to do. I've been arguing to Kenya that Kenya should sail as close to the wind as it possibly can.
Yes.
Borrow as much as you can without tipping over the edge into a
Yes.
Turkey-Argentine style crisis. Because the quicker you can get investment up, get infrastructure up, electricity supply up, the quicker this country can industrialize and grow not at 4, 5, 6, 7, 8, 9% every year. Double its economy every 10 years. That's what we want. But this is not the year to be trying to aim for that goal.
Not to be overly bullish. So tell us, we're going into the year end. What are we in September? What is your recommendation? What is your conviction trade from here?
Well, We're an emerging market investment bank.
Yes.
I am inevitably biased to want to work here. I must believe that EM has got
Yes.
something going for it more than developed markets.
Of course.
So please excuse a slight bias. But I think Trump's tactics do tell us we'll get the trade war over temporarily in October. I think there will be a relief rally. And I think some of the pressure that's been building on emerging and frontier markets should ease. Markets should be looking better. The rand should be rallying a bit. Others should be rallying a bit more. Turkey, if they let go of this pastor who's been imprisoned.
Yes.
12th of October could be a key date for them. Argentina could start to look better. 48% yields on one-year paper on a currency that's 20% cheap. You know, these are some really interesting assets now for investors. So I think it's going to look pretty good going into the end of the year.
Excellent. Thank you, Charlie, for finding time for us today. We really
Pleasure.
appreciate it.